it's a great time to look at this wholesaling because which is I know something that you guys do a lot of. A great time because imagine let's say your neighbor is 4, 5, 6 months behind on their mortgage. They're not going to be able to come up with that money, especially if they're not working. Well, if you can cut a deal with them and clean up all their stuff, because that their house has probably gone up during that period of time, it's a win-win for you. There's a massive opportunity right there, because they're going to save in a lot of ways. Obviously not having to go through the foreclosure process, not having to pay potentially commissions and things like that, and all the things that can erode, some profit. And I think it's a great time to start digging into the wholesaling pre-foreclosure process right now and start to look at.
And thank you again for joining me for our Thought Leader Spotlight series. I'm your host, Matt Camp, head of partnerships for DealMachine. On these, we really like to shine a light on industry experts and hear your inspiring stories and really educate our audience on lessons that you've learned and how you see the world evolving. So today, I'm really excited to welcome on Ken McElroy. Ken is a real estate investing expert with 30 plus years of experience, over $1 billion in real estate transactions, a rich dad, poor dad advisor, and a world-class educator in real estate investing. So I know you're the author of the best-selling books, the ABCs on real estate investing, the advanced guide to real estate investing, the ABCs of property management. So we can really cover quite a wide range of things today. But I love seeing that you put out fantastic podcast and YouTube content as well. And, that gets over 1 million views a month at this point. So, we're excited that you're on here and welcome on, Ken.
Thank you, Matt. Thanks a lot. I appreciate it. It's been a heck of a journey and an incredible industry to be in, I must say.
Yeah. And today, I'm excited to dive into your thoughts on everything from like the housing market to your keys to real estate investing success. But to really get started, Ken, I'd love to dive a little bit deeper than your standard bio. So could you maybe tell us just a bit about your life journey and maybe a few highlight pivotal moments that really got you to here today?
Absolutely. Yeah.
Yeah.
Thank you. Well, I think I probably started off like a lot of people. My parents, they weren't formally educated, and my mom was a hairdresser. My dad was a contractor, so I knew how to fix things, and I luckily got a wrestling scholarship into college, and that kind of got me into higher learning, higher education, and that was nice to be able to go, and but I didn't have any money. My parents didn't have any money, and I didn't know anybody with money. So I started, I think, like a lot of people. But what happened was, while I was going through university, a friend of mine said, "Hey, would you manage this 60-unit apartment building in downtown Seattle, which is where I lived?" Mm-hmm. And I said, "Well, tell me more about it." He said, "Well, it's free rent." And I said, "I'm in," because, at that point I was racking up student debt and trying to go through college, and, because my wrestling scholarship didn't pay, it wasn't for everything. There were still some expenses. And so that really got me into the business. And I started to really enjoy it, believe it or not. I felt like kind of a duck to water. I knew how to fix stuff. So I was, doing all the maintenance and painting units and cleaning toilets and collecting rents and all those kinds of things. And the tenants that were in there weren't necessarily good tenants, a lot of them. So, but I was like, okay, well, there's a process to getting them out and getting new ones in. And I was trying to work less. And then the owner came in about 3 months later, and he's like, "Hey, man, thanks for turning this place around." And I was like, "Well, I'm just trying to work less than I was when I started. It was a mess." And, and then he left, and I started looking at the numbers and the cash flow and all this stuff and the expense savings, because I was doing most of the work and they were vending it out before. And I was like, man, I'm on the wrong side of the desk. Literally, it was that apparent to me. And so I decided to get my real estate license while I was finishing up school. I had planned on going into advertising and marketing, of all things. And I just dove into that. I dove into real estate. I started becoming a property manager in the first 7 or 8 years, and I was managing properties. I learned a lot. And then I got the courage one day to buy them. I didn't know how. I didn't know legal. I didn't know how to get a loan. I didn't know how to raise money, but I didn't know how to manage at that point. And so I was seeing deals that I thought were real value adds. They were broken. And that a lot of times when there's a lot of real estate that is in trouble all the time, even during good times. And so I started buying those kinds of properties and turning around and creating value. And I never stopped. And now we've got 250 people. We own about almost 10,000 apartments and some self-storage and some office. But I just started, man, with that 2-bedroom, 2-bath. I used my own money. That's how I started, and with money that I had saved, and I ran out. I was like, okay, well, if I'm going to keep doing this, I have to figure that out. I have to learn how to raise money. So, it's been a long process with lots of pain and failure, honestly. And over the years, it's just I've just tried not to do a mistake twice. And we've grown a nice reputation, a good business, a good company. And so we have our own construction company, our own property management company. We're our own developer. And then I met Robert Kiyosaki along the way, who wrote Rich Dad Poor Dad. But I honestly, Matt, I was just pitching him for investment. And I didn't know, much about him. We became very good friends, and they started investing with us. But we have, I have over 1,000 investors. So Robert's one of those, him and Kim. And they've been great advocates of us as we've performed and found deals and turned them around, just like I was doing when I was doing it at a smaller level. So it's been a blast. The whole thing's been a blast. It's been a blessing. I have the freedom that I want. I travel a lot, and I'm really close with my family. So
yeah. That's phenomenal. Yeah, I love the idea. Like you said, don't try not to make the same mistake twice and learn along the way. Like that'll get you pretty far right there. So
yeah.
yeah. I'll ask a little bit around those keys to real estate investing success that I love the ebook, the 21 keys that you have outlined there on your website. But to begin with, one topic that we're constantly hearing from people today, and I know you speak on often on your YouTube channel, is just kind of the state of the housing market and where real estate investing is heading. So I know a couple times you've put out the prediction like, hey, towards Q4, like end of 2021, going into next year, it looks likely that there might be a downturn at that point. Can you maybe talk a little bit about that for our audience and why you think that?
I definitely can. So, as you know, Matt, so I've been through several corrections in my career, and in the 90s, and certainly in the early 2000s. And so I've had the opportunity to see them start, see the signs early, kind of see, where things are heading. And I think a lot of times people, they believe that the housing market is a national market, that everything's treated the same, but it just truly is not the case. And so the beautiful thing about real estate is that there are definitely areas that are always going up and that are always going down. And if you go way back, you can just look at things that are now so obvious, like Detroit, Michigan, at one time, and Cleveland, Ohio. If you go way back, those are vibrant areas. They've changed over time. That was obviously industrialization and other things, and auto manufacturing and things like that. But there's been a lot of things that have happened in this country, and so you can't just look at what's happening like this week or in the last year. You have to look at the bigger picture, and so what I see is the government has basically had told people that they didn't have to pay their rents, and they told people that they didn't have to pay their mortgages. Not everybody took advantage of that, but a lot of people did. And I'm not saying at all that they didn't deserve to be either. People got told they had to be home, and they shut down everything. So all of that has a ripple effect. That's all I'm saying. And so so there are people that are months and months behind on both of those things, and there's millions and millions of people, both on the mortgage and both on the rental side. and a lot more on the rental side, but which is, my primary business. And so if you really look at the data that's out there with the Mortgage Bankers Associations or Black Knight or any of the people that track forbearance, let's say, you're going to see, and it's pretty shocking. There's millions of, there's 3-4 million people that are behind on their mortgages. And so everybody believes that you can just throw that at the end of the mortgage. Well, let me tell you something, from somebody who's still buying, and I have incredible credit, and I have a massive balance sheet. And they're raking me over the coals to, for all the stuff just to have a new loan. And so, if you have any kind of a new job or let's say no job, or maybe not a lot of reserves, the lenders are going to have to make some tough decisions. They're not going to let people live in their homes for free. And then, if they have to, then if the people are lucky and they are able to throw it on the back end, maybe they can stay in their houses. But what I think is going to happen, because we have this incredible run up in prices too, because of the supply issue, I think there's just going to be a lot of listings. I think people are going to have to scoop equity that they've gotten now over the last year due to the lack of supply or lack of inventory. And so my prediction is really that not a lot of people are going to lose their house through foreclosure. It's more that they're going to list it to scoop the money and then try to figure out how to rebuild. And so for that, I believe that we're going to see, anywhere from 1.5 million to 2 million homes get onto the market, starting with the fourth quarter and into next year. And it's obviously not all going to hit in the fourth quarter. In addition to that, we're going to have the rental moratorium, which is technically up in a week at the end of March. So we're going to have all these things happening. And so I do believe that we're going to see some disruption at the end of the year. And we haven't even talked about commercial. My friends that own commercial office and commercial retail and commercial hotels, and they're in big trouble too. So you're going to see a bunch of things happen. I believe once the government starts throwing a bunch of money at everything.
Yeah, and I know you kind of framing it and saying, hey, there might be, based on supply and demand, somewhat of a crash or somewhat of a downturn at the end of this year. Like, I know that might sound scary for real estate investors, but how do you think investors should approach this and prepare for that? And do you have any advice for new investors when it comes to, a crash like that?
Yep. Well, so what's interesting, Matt, I mean, imagine the United States is just a bucket of people moving around, right? You know what I mean? Like, I understand there's new births and there's deaths and all that kind of stuff, and there's immigration, all those kinds of things are really important, by the way, as it affects real estate. And those are all real factors. But the truth is, as people move from New York or Chicago or Seattle or LA or San Francisco or whatever town you want to pick on, they're moving to other places. So there's depressions in some areas and there's bubbles in others, so the key is obviously to try to figure that out, like the migration patterns of people. So, as big companies like, let's say, Twitter or Pinterest or, some of the ones in San Francisco as an example, say, hey, you don't have to come back to work. Okay, so where do all those thousands of people go then? Because they're not going to live in $3,000 apartments a block from work. They're going to move, obviously, and try to save that. So that's what's happening right now. People are moving all over the place for a number of reasons. So when I say, that there's going to be a housing crash, I still believe that, if you start to look at the slide that we're starting to see in a lot of these call them the urban markets, I still think that there's a way to go. But on the other side of that there's incredible opportunities in areas that are, 1 to 2 hours away from some of those urban markets, because most people are staying within their state. I think 72% of the people are staying within their state. And there's a lot of migration outside of the state, of course, and people going to Florida and Arizona. And I mean, I live in Arizona and we're booming like crazy. I'm not kidding you. Almost every single day I hear people moving here from, Seattle or LA or San Francisco to, because they're selling these houses that are $1 million, $2 million. and they move into Scottsdale and they're buying a nice home for 500 grand, 600 grand. So, that's happening right now, and it's creating a bubble here locally. And but it's not real. It's just, it just is what it is at the moment. And it'll be interesting, but there are areas that are going to fall. So you've got to be careful on where you're investing, and also, is it going to continue to slide? We haven't seen the banks take stuff back yet. We haven't seen the foreclosures, that we saw in 2008, and we will. That's for sure. I mean, it's documented. We got millions and millions and millions of people that are not able to pay.
Yeah. And I mean, like you said, I mean, that entire, market swing, on the other side of that could be great opportunity for many people. Like, is there anything you recommend, new investors do right now to prepare for that and to,
Yeah. Oh, for sure. Well, the first thing is I think that it all boils down to data, and you got to stay out of the gut feel kind of stuff. And, just because something happened last month doesn't mean it's going to happen next month, and pay attention to the data. And there are really, really, really good information sources out there. Like Realty Track is a great one that tracks foreclosures by city, by county, by submarket. Like all this data rolls up. So the data that you might see in NBC or CNBC or Yahoo or Finance or whatever, all that stuff comes from one small neighborhood. Then to a city, then to a county, then to a state. So it's just data. So if you really drill down into the data, you can start to see which markets are going to emerge first. Which ones are in foreclosure or pre-foreclosure, and just stick with the math, and then you can kind of see which ones are going to pop. But we haven't seen anything yet. I mean, that's the fact. So right now is a time to get your capital together, get your partners together, get your team together, start to take. I mean, it's a great time to look at this wholesaling, because which is, I know, something that you guys do a lot of. A great time, because imagine, let's say your neighbor is 4, 5, 6 months behind on their mortgage. They're not going to be able to come up with that money, especially if they're not working. Well, if you can cut a deal with them and clean up all their stuff, because that their house has probably gone up during that period of time, it's a win-win for you. There's a massive opportunity right there, because they're going to save in a lot of ways, obviously not having to go through the foreclosure process, not having to pay potentially commissions and things like that, and all the things that can erode, some profit. Mm-hmm. And, I think it's a great time to start digging into the wholesaling pre-foreclosure process right now, and start to look at, because nobody, I mean, if you or I are in trouble, nobody wants to have to go through all of that. It would be great if it's like owning something that, somebody comes and you're like, oh, I'm so glad I sold that, like, just a lot of people are in pain and they don't want to have to go through all of that. So, and mm-hmm. I'm sure they're getting preyed on by a lot of people. So.
Yeah. And I think you're right. Like, that wholesalers can use that as a way to solve problems for people. And I know a lot of people listening to this now are wholesalers, or they're trying to get into wholesaling. And I think a lot of I know I mentioned that 21 Keys ebook, 21 Keys to Real Estate Investing Success. I loved that. Like, I think that we'll link to that in the description of this video here. But I think there's some really, really good stuff in there to really talk about how to think foundationally as an investor. In that, you really talk about saying, like, anyone who works smart enough and works hard enough can be a real estate investor and increase their wealth that way. Why do you think that just real estate investing in general is the best type of investing out there?
Well, there's multiple reasons. One, there's massive tax advantages to owning real estate. Massive. You think about it, the government incentivizes landlords to provide housing because they don't do a very good job of it themselves. Historically, you look at government housing and it just hasn't worked. And so they've given that over to the private sector, and therefore they give you opportunities to have massive tax breaks called depreciation and a bunch of other things that you get for owning rental housing. And so and you can use that depreciation to offset income. So you might be making money, but you can use depreciation to offset that income, and you actually might even show a loss for your income. So you're getting cash flow. Hopefully, you're buying for cash flow, and then you're taking the depreciation expense and you're wiping that out, and you're actually reporting a loss. So you get tax-free income, plus you get the loss that you can use for other things. And so for me, with most of our investors are more high net worth investors, and they have businesses that they are making lots of money on, or whatever the case might be. And so, or maybe they just have a lot of money in savings, and they're, or in the stock market, for example, and they feel like that it's a bit risky. Well, what they're trying to do is they're trying to spread it around, and what everybody wants, Matt, is they want cash flow. That's what they want. I called Robert the other day, Kiyosaki, and he's like, let me call you back. He's like, I'm on the phone with a financial planner. And Robert, that's like the farthest thing you would ever hear him say, ever, is that he's on the phone with a financial planner. But he called me back, and he's like, I go, how was that call? He's like, it's crazy. He's like, there's all these people that have millions of dollars in the bank, or and they're retiring, and maybe even their whole net worth, let's say, is $1 million, $2 million. Their biggest issue is that they don't have cash flow. So you imagine, we all know we have operating expenses. So let's just say your operating expenses per month are $5,000 a month. I don't know. Let's just use that. Mm-hmm. Well, if your money isn't making at least that, you're going backwards. You're eroding. You're paying part of that $1 million of your savings is actually paying your expenses. So a lot of people are scared of retiring because that money isn't making money. And so so there's lots of things happening right now, and I think that if you can build a portfolio on cash flow, which is in the 21 keys, as is focused on cash flow, then you're going to be fine. And that was my whole philosophy in the beginning. I personally wanted to grow a cash flow portfolio so that I didn't have to work unless I wanted to. And my first goal was just, at the time, I had like $3,000 a month of expenses. And I was like, okay, I just need $3,000 a month of passive income. And once I get to that, then, I'm financially free. It wasn't really a lofty goal at the time. And once I got to that point, I got to tell you, I had, my breathing was better, you're like, oh, great. Okay. So now all I got to do is keep these tenants in here and keep this cash flow going. And I'm covering all my expenses. And so now I can go wherever I want. I can go sit on a beach for a year, and my bills are being paid. And so, that's how I've had that philosophy with my company. With, I was trying to get my company to be financially free, which I did. And which is why I started the management company. And so I just continue that philosophy. As like, if you can make people money, create wealth for them, get some cash flow yourself, and cover all your expenses and not pay tax, it just is a full win-win.
Right. Yeah. Yeah. I mean, I think a lot of people listening to this are just getting started on that journey. And I'll ask you a little bit about the investor that is, scaling a little bit beyond that. But for those new investors, I mean, I know one part of what you talk about is emphasizing like, hey, real estate is not a, get rich quick type of scheme. But you also do a pretty good job of helping investors take action right now. And you even mentioned, like, even in this market, you're still buying, you're still investing. So, what advice do you have for the kind of the new real estate investor that might be afraid of getting started because they feel like they don't know enough, or the market timing, or they have all, there's a variety of hesitations there.
Yeah. Well, first of all, they're right. It is scary. Yeah. And
yeah,
it's like anything. I'll tell you what's easy: handing money to a financial planner and looking at your statement every quarter. That's super easy. Real estate is not. Real estate is you have to make a lot of good decisions, and I'll tell you that the first deal is by far the hardest deal. But if you just stick to one thing, just one, then you'll be fine. And that is if you just make sure that it cash flows. So that's it, Matt. So, if in other words, if you're trying to buy something, let's say a couple $100,000, and your goal is to, sell it later for 250, that's not really a good investing strategy. But if you're buying something for 200,000 and you put, let's say, 40,000 down, and it cash flows 4,000 a year, now you're making 10% cash flow. $40,000 investment with a $4,000 a year return, that's a 10% cash flow. So if you just focus on cash flow, then I'm telling you, it doesn't really matter if the property value goes to 180, 160, 150, or to 250, 260. It doesn't really matter as long as you're getting that $4,000 a year cash flow, which is entirely different business. That's rent, that's management, that's all those kinds of things. And you should be able to do, $300 to $350 a month cash flow on an investment, and so that's about 4,000 gross, so if you just stick with cash flow on your first deal and not get caught up in, I'm going to buy this house and I'm going to sell it, next year for more. That's the risky, that's what wiped out everybody in 2008. And, Ross, my partner, and I, we went through this. We went through the more than the 2008 correction. What saved our butt was the cash flow. When people fell out of housing, guess what they did? When they fell out of single family investing, they went to apartments, they went to rentals.
Yeah,
so
right.
the rental market got better as people fell out, and that's actually what we're about ready to see again. And so you're always going to have a good rental market, unless it's overbuilt, which doesn't look like it's going to happen anytime soon. We're going to have much more demand than we are supply in the short run. So the key is cash flow always, and not worry about the equity. We don't even look at, I don't even know how much equity I have right now.
Yeah. Yeah. I mean, you're certainly taking quite a risk if you're counting on appreciation like that. So
yes.
Yeah. Do you think, I know within your, the education you put out there as well, you also talk about and saying, hey, choose one specific strategy and master that, especially for new investors. Do you have any advice on kind of how to find that investment strategy or how to find your niche like that?
I do. Yeah. It's really overwhelming. I'm telling you, even at my level, I get land deals. I get stuff in St. Louis. I get stuff in Australia. I get stuff in Canada, Mexico. I'm looking at deals all the time. And I just want to be on a plane going and look at all this different stuff. There's so much to learn when you are in St. Louis or you're in Mexico with the real estate laws or lack of real estate laws or lending or this or that. And so, it's overwhelming. And so the hardest part is the discipline of trying to stay in your lane. And so for me, we've just tried to stay in the multifamily investing lane. And that's all we do. I find myself even today looking at an office building package, in San Diego, like as an investment, and I was like, okay, like delete, just move on and stick. So it happens, and people are going to come to you with things. They're going to come to you with land deals. They're going to come to you with all kinds of crazy stuff. And I certainly know I've seen thousands and thousands and thousands of crazy deals. And so what I found is the easiest thing to do is stick with the submarket that but it's got to be going the right direction. So you want to be in an area that's pretty darn obvious after I say this, that people are going to, that's growing, that's progressive. That could be a small community college area. It could be a university that's starting. It could be an employer that's expanding in an area, or a military base, or, you want to be in an area that's gonna, all of those things, Matt, create demands for real estate, all of them. And it actually, if you really think about what happens when 1,000 people move to a town. Every single thing, they require everything that you require. So, they want to, They need all the vending services. They need housing. They need potentially put their kids in some kind of school. They need to go to a grocery store. They need to get their hair cut. Like all of that stuff is a real, believe it or not, is impacts on real estate, right? It all helps an economy when people move into an area, and it hurts an economy when people move out. And so, I've owned property next to military bases that have been deployed. And in other words, thousands of people leave.
Mm-hmm.
So that's a massive impact to a little town. And so, those are the kinds of things that, think of a stadium, when people show up to a stadium, all the commerce that goes on, from parking to the restaurants in the area to the vending on the inside, and, people staying in hotels and, all of that stuff. Okay. Think of that. Those are real estate impacts. And so you want to find your area and be an expert in that area, and then figure out in there what it is that you might want to do. And I'll give you a couple examples. We have a very progressive president at Arizona State University, and he's if you watch the growth of the students and the enrollment, all that kind of stuff over the last 10 years, it's been incredible. So obviously, but it's still the same. It's still the same university in the same area. But what's happened is there's been a massive demand in the housing, in the different kinds of housing, in the dorms, in the condos, in the single families, even in the restaurants and things like that. As they all pour in based on where kind of the demographics and population are growing. Yep. So it's just that simple. Just be an expert in your submarket and get to know everything that you can know, and then decide if it's the right submarket for you. And every submarket has kind of a beginning and a downturn too. So you just got to kind of time those things, and you'll start to be an expert in those areas.
Yeah. Yeah, I mean, I think you, but outside of those criteria, you did a great job within that ebook outlining and saying, hey, target a moderately priced home in a working class area, and then, like you said, really get to know that neighborhood, like put yourself in the shoes of that renter and understand your target demographic and why they would rent your particular property. Like, can you maybe talk through that thought process of why you've outlined those factors and why you kind of recommend that criteria too?
Yeah, well. It hires your level of certainty. And so for me, it's interesting. Last night I was having dinner with a friend of mine who owns a very big business. And he's like, what do you think about this market? And I said, dude, I would stay completely away from there. He's like, really? I'm in the process of, I go, I just went boom, 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 boom. I go, check out the mall. Like, look at the mall. Look at the cars in the mall. Is there anybody? The mall's dying right now, and look at the restaurants in the area. Look at what happened when the big employers moved out of that area. That area is still what I call, I said, don't catch a falling knife. Don't grab it while real estate prices, all that stuff is kind of moving away. And this is happening all over the country. And so, I said, you want to be in a market that is going the other way. And there's super progressive people. If you take a look at, the areas that are expanding, I'm from Seattle, and you take a look at what Amazon has done for downtown Seattle. It's remarkable what it's done from the prices and the rents. And so if you owned stuff there, 8, 9, 10 years ago, just as you watch a company like that is massive now, but it wasn't then, and, grow. And I watched this on Microsoft when I was up there. I watched this with Starbucks when I was up there, being a Seattle kid. So, I watched this, and I watched Boeing leave, as an example. They went to Chicago, their corporate offices. So the opposite happened. And so you've got to pay attention to these kinds of things as people that are deciding where do I want to have my company, and what am I going to pay my people, how big am I going to grow it, how progressive is the company, and then just try to be in those areas, and don't be pioneering. Don't try to go out to the edge of town where nobody wants to be and then try to make it work. You'd be super frustrated. You're better off to pay a little bit more money and be in an area that has a little bit higher degree of certainty and is trending the right way.
Yeah. And I think, even outside of that, outside of investing in it, the budgeting for that entire process of, fixing up and running that property, like you give great tips and advice on that too. So a couple tidbits I've pulled out, like you said, hey, overestimate your costs, avoid being a penny pincher, hope for the best, plan for the worst. Like, what are some of those kind of common budgeting mistakes that you see new investors making that you can, help catch early?
I see it a lot. So what happens is you have to be brutally honest. I was on a phone call today with a big group out of New York, and they own a property in Houston that I'm in the process of trying to buy, and I budgeted 500,000 for the roofs, and they said that they haven't touched the roof since they've owned it. And Texas roofs, they're typically there's a lifespan on those, and so at the end of the day, what happens, man, is you either do those or it comes out of cash flow. So when you are buying something, you have to recognize the physical part of the property, and you have to recognize the deferred maintenance and all those kinds of things. And so, like when we buy a property, let's say a 200 unit property, we walk every single unit inside, and we document, okay, this unit, when the people move out, this unit's going to cost $500, or this unit's going to cost $4,000. Maybe it needs new flooring, and maybe it needs new appliances or something. And so all that stuff rolls up into capital budget, and then you have to have that on high ground, or you have to have a plan for that, because it'll mess with your cash flow. It's got to come from somewhere, and it's going to affect the pricing that you can get for the next tenant if you're not constantly upgrading. So real estate is one of those things that does depreciate over time physically, and requires maintenance, just no different than your own home. And so so I always say, make sure that you have significant reserves, and make sure that, like right now, the people that are getting killed right now are the ones that don't have reserves, and for a different reason. That's for quarantine and COVID. Mm-hmm. And so there's a number of people around the country that are not paying rent right now. And that's income that's not coming in, and that has to come from somewhere else. And so these are all in the 21 keys. These are things that I've learned over time. You have to have the reserves for unforeseen things, and trust me, things do happen. We've had hurricanes, we've had tornadoes, we've had hailstorms. Now we have quarantine. This COVID. Mm-hmm. We've had main plumbing lines break. We've had floods. We had a reservoir break and flood all the first floor units. And so, things happen in real estate, and you have to have some reserves on hand. And so, just be careful not to distribute all your cash, and have just a little bit available for you for that rainy day.
Yep. Yeah. And I think, you kind of bringing it back to that whole idea behind cash flow and buying for cash flow, that's gonna, it all plays well together. I think if you buy foundationally that way, it's gonna help with the reserves as well.
Yep.
Yeah. I really appreciate your time. One last thing I want to dig into really quick here. I know you're phenomenal at helping others and putting out so much great content, and are clearly really passionate about helping others. One part of that, I know you have the master course for kind of the real estate investing beginners, and then also that premium membership that's more for advanced investors.
Yeah.
What are some of the challenges within that premium membership that you often hear from more advanced investors that you're really helping them tackle head on? And do you have any advice there?
Yeah, so thank you. So we created the master course for people that wanted to get into the industry, and you can find that at kenmcElroy.com. And so what we did, Matt, what was happening is, as I was growing and people were reaching out, they were asking a lot of the similar questions, on scalability and raising capital and property management and how do you structure deals. how do you find good partners, and how do you find good vendors, and how do you hire a property management company, all those kinds of things. And so we decided to start doing videos to help people, because it's tough for me to get on the phone with everybody and have that exact same conversation. And, because it's really, for me, it's the same conversation. It might be a little bit different, but better off to put together a video that's comprehensive for people. And that's what we've done. And so we started producing videos and putting them up on our premium site for people to go kind of noodle through and answer some of their own questions on the legal. And, we've got some forums up there, and, there's a bunch of resources that they can get as well. And it's been growing like crazy. We just started it actually during the pandemic, actually, the YouTube channel and everything, because I kind of had the time before. I was just doing deals, and so it's really been rewarding. And then the best part has been we do a live on Monday for our premiums, and we answer their questions. So they're saying, hey, I'm buying this property, or I'm trying to structure this new development deal, or I'm trying to raise this money from somebody, which I'm looking at. And so, it's just kind of, free form, and we're just, it's been great. Yeah.
That's great. Yeah. Yeah. And Ken, again, I really, really appreciate your time today. I know obviously you have, your books, the podcast, YouTube channel, all these different resources. How can our audience get more involved with you, and what's kind of the best way to keep in touch that way?
Yeah, for sure. Just obviously go to kenmcroy.com, and you're going to find that, the 21 keys there, as you mentioned. And that's a great way. Just get on our email list, and then you'll start to get these weekly emails, and then you can, there's a bunch of free stuff too. So I said, listen, we need to, there's a bunch of people here that aren't ready to, pay $20 a month. So let's have a whole bunch of great resources for free. And you could just, just start asking questions and start going to the YouTube channel, start looking at that kind of stuff. We have, I think we're up like 225,000 subscribers.
It's crazy
already. Yeah. We started, 1 year ago, and it's been fun. And I'll tell you what, these people are passionate. They own stuff. A lot of them are brand new, and they're trying to figure out how to do their first deal. A lot of them are super sophisticated, and what's really been beneficial, Matt, has been we have our members are now helping other members. So when somebody puts something up, the questions are oftentimes getting answered. I also answer them too, but it's really nice to see people helping people now with everything we have going on.
That's phenomenal. Well, I'd love for our people to get involved in your community too. But again, all this stuff we'll link to in the description of the video here. And, thanks again, Ken. I really, really enjoyed this conversation. So
of course, man. Anytime, man. Congrats on all your success. It's been fun to watch.
Yeah. Thanks so much. And to everyone watching, this is Matt Camp with DealMachine. Happy deal finding.